We've got CPI, and this is an incredibly important report,
Yeah.
Matt, Consumer Price Index, because again, this is moving, the psyches and the narratives around where inflation is and where interest rates may go, and when, really when, not if, but when the Federal Reserve may begin to cut rates. We're just on the backs of the European Central Bank and the Canadian Central Bank cutting their benchmark interest rates, Matt, last week. It's a big global sign that says, look, central bankers are looking at easing, still in restrictive territory, but coming off a little bit, again, to maybe achieve this perfect soft landing, if there ever could be one.
Yeah.
But we're also, again, living in a world, Matt, where every 3 or 4 weeks, sentiment changes, and we go from no rate hikes this year, absolutely none, impossible. Interest rates are going to run, to interest rates are falling off a cliff. The 10-year is down closer to 4.3, 4.27. It's been going from there to 4.4, back and forth, back and forth. The 2-year yield is now below 5%, which is a big deal. So things are moving. I think this is a big deal. With more information from Jerome Powell and the FOMC later today. Matt, what were your first reactions when you started digging into some of the numbers and some of the detail? Because I think I heard it, but just I'm giving your reaction.
I think it's pretty promising. I think that there are plenty of reasons to be confident in these numbers, and it's something that we've been waiting for a long time, and something that we've really thought was predetermined and was going to happen 4 or 5 months ago. But these numbers are coming down, and I don't think that's going to matter to anyone's thought of the economy. The sentiment on the economy is still going to be fairly low, but at least we have this, and hopefully it will factor into the Federal Reserve's opinions. I think that no matter how you slice it, 0% increase is good. But this is true in other reports that we've read when it comes to sentiment and perceptions, especially when it comes to inflation. People don't want lower price growth. They want the prices to go down, and that's just a sad fact.
Yeah, and probably just not going to happen, at least across the board.
Yeah.
I'm looking at this graph, Matt, of CPI, all items going back to 2004. I mean, obviously we had this huge run up, after the pandemic. Inflation basically, peaking out right or just under 10%. But now we've been kind of stalled here since really kind of July 2023, kind of throughout the last year or so.
Yeah.
As we've been hovering around this kind of 3% range. But we have, I guess, the progress is that, we're not seeing any more growth, and we're kind of, again, hovering in this 3% range, which is, well above the Fed's target of 2%. But when we start, I guess, acknowledging that this data isn't perfect, and this isn't exactly where inflation is today. This is really just the number, the components of CPI. And especially when we get into the details of, shelter, Matt, while the shelter has come off the growth of that we saw. I mean, it's not growing at the 8% that, it was saying that it was growing in April of 2023. It still shows, shelter generally growing by 5% when we had an entire year, Matt, where the nation's rent growth was negative.
Yeah. Well, and the decline in shelter prices is is slightly less steep than the growth in shelter prices. I think that it jives, or however you put it, it really resonates with these articles that I've been reading lately, where it's like housing may be permanently more expensive than we thought, and it may not come back to normal. This shelter price growth, or shelter prices, that is, may not decrease. That it may just stop growing.
I mean, if you look at some other developed countries, whether that's the UK or Canada or Australia, I mean, their housing prices are significantly higher than the United States. So it's different from what we're accustomed to in the U.S., but it's really not outside of the norms of kind of where the rest of the world is. Yeah.
That being said, we are going to talk about home buying sentiment, and that's low, and that should lead to a little bit lower home prices in theory.
Yeah.
But that being said, people have been thinking that it's a horrible time to buy a home for the past 2 years, and for the past 2 years, home prices have continued to go up, even as rents have gone down. I think that that's a story that a lot of people, and maybe they are, but they're not talking about it enough, in my opinion, is how much home prices have been resilient and how much rents have gone down comparatively, and like in the face of inflation.
And now, when we look at absorption in rental units, while like rent has come down a little bit, with all the new supply that's been coming online, which we're going to get into in just a second, we were anticipating that we would see further declines in rent. Further increases in vacancy, declines in occupancy. But the fact that, we're keeping our head above water, I think is the best way to describe it. I think underlines, okay, there's actually quite a bit of demand for the rental market. And some of that, not all, some of that is being fueled by it's difficult to buy a house.
So there's like interesting data that it's not there for apartments, but for single family rentals, they have information on like what proportion of people are leaving a single family rental to go to buy a home. And they don't have that for apartments again, but it would be really interesting to know, okay, are you renting an apartment because the home buying prices are too big? Are you leaving an apartment to buy a home or to rent another apartment? Those kind of numbers would be interesting. Maybe put it on a leasing form or something, or just a little questionnaire would be great to know, just for my benefit.
Yeah, and in that makeup of renters by, we used to call them renters by necessity and renters by choice. I haven't heard that term used as much recently for whatever reason, but I think that's shifted because not that people are making less money. It's because all of a sudden people who could have afforded a house but were choosing to rent, all of a sudden who would be the renters by choice. They're still doing really well, but it may not exactly be as much of a choice as that label, would describe.
I agree.
Matt, just looking at some of these other metrics, then let's move into the apartment market and looking at supply, because I think that's just really interesting. Looking at taking off shelter, looking at just food from home, Matt, look at, we've seen, again, this was a big complaint recently. So I don't think it was just eggs.
I know, but that's what people always say, eggs. And it's
eggs
like,
were one thing.
That was in 2022 and 2023. Maybe it hasn't been eggs for about a year. So I heard that specifically 2 weeks ago. I was like, oh, I wonder where you buy your eggs, because you're wrong. It's other foods.
They're going down to the farmer's market, Matt.
Yeah, I guess so.
But anyway, so food inflation, food at home was up 13.5%. That was incredible. And that's what I think really was putting a lot of pressure on people and being like, I can't make a big decision. I can't afford food.
Yep.
Well, that's really now declined. Wages are outpacing inflation right now, marginally, but wages are significantly outpacing the growth in the food at home costs. Not exactly sure on what's driving all of that, but it's definitely good for the economy and for the consumers. Energy, Matt, also down a little bit, and so we're seeing a lot of these. Energy's down, now it's up a little bit. We're seeing a lot of these components. Food generally is the similar. Food away from home,
even
down.
Food away from home is going down, and that's a $50 Big Mac, which I'll reference again.
Gasoline, which is obviously, this is just what the oil markets are doing, more or less. But new vehicles, look at that, Matt. New vehicles are way down. The service is less energy. Medical care services, that's more of an insurance conversation right there. But generally, Matt, we're seeing some progress. I think that the Federal Reserve is definitely going to want to see more data. A lot of calls and conversations about a September cut to interest rates, most likely 25 basis points. The other central banks just did 25 basis points of cuts. My base case is still for a very early 2025 rate cut. I think they're going to see it through just to make sure, because I think if they announce rate cuts today, the markets are going to go crazy, and they could kickstart inflation once again, and we know that they don't want that.
I believe that they are also releasing their economic projections today as well, or at least this week.
They are. The Survey of Economic Projections.
It'll be really interesting to see what
it will be. And again, not getting too inside baseball or really trying to get into the psychology of all of it, but I see. Again, there's a lot of conversation around they're going to lower interest rates right before the election. And I'm in the camp of they're not going to do that because of the election, for the main reason of they're so concerned with the Federal Reserve's image
Yep.
and how they're perceived. And I think that a lot of our institutions in the country are trying to save face and trying to regain credibility. After a lot of losing a lot of credibility over the last couple of years, and I may be at a place for saying this, but when I see, and again, not getting into politics at all, but when I see the guilty verdicts at Trump's trial a couple weeks ago, regardless of what you think about that, kind of crazy charges, but regardless, guilty verdict. Okay, former president, he can be found guilty. And then Hunter Biden this week being found guilty on those 3 gun charges. Both cases where the charges were like, if they weren't that person, they probably wouldn't have been, charges were brought against them. That's either. That doesn't matter. The fact is that there are people in power that are being held accountable. I'm not saying, again, don't agree with necessarily any of this. I'm just saying the perception is being put out there. Our system works. The justice system works. We can put a former president, we can convict a former president. We can convict a current president's son, all trying to regain some credibility, our major institutions in the United States. I'm not saying they deserve any credibility. I'm just saying that's what they're trying to do.
Yeah.
And
whether you agree or disagree with either of those, it is a little bit of a flashpoint right now, and it has raised the idea of credibility in whether it's the justice system or or all these different institutions, I think. And I bet that the Fed is thinking, well, if I lower rates and then
in September, right before the election.
Yeah, right before the election, and then Biden loses, then am I going to face retribution? Because
or if he wins, they're going to say the Federal Reserve is being is just a tool of the Democratic Party or something. And I don't think it's there's a big conspiracy, and there's a room where the Justice Department and the Fed are getting together and we need to regain credibility. But I just think that they're independently coming to these conclusions of look, what do we have to do for our credibility so we can be an effective institution? They're coming to similar conclusions. And whether it's subconscious or not, and again, at these institutions, they're not going to say we need to make a decision to regain credibility, because that's the opposite, really.
And it does have a direct, especially for the Federal, if not anyone, it does have a direct impact on how they are able to communicate their message. And are they if no one perceives them as credible, they're not going to take them as seriously when they're trying to communicate and they're trying to change people's minds about their consumption.
Yeah. So again, this is just kind of conspiracy corner, and it's interesting to think about. But again, so my base case is not for September, but it's going to be more January for that rate cut.
Okay.
But but with this data, I think that it's very reasonable for a rate cut to take place in September.
Yeah.
Again, not because it's like everything is fine and we're out of the woods, but at some point, we're looking for a more variable slowdown in easing rather than a huge downshift, because we don't want there to fall into a massive recession and then have to bring rates down to zero again.
Yep.
I mean, would that work? Sure, but the whole idea of a soft landing is you're gradually ease it. It's soft. So you have to start easing off the. You got to put the flaps down.
Yeah.
And you've got to ease off the.
It's true.
Throttle.
I just want to go over the numbers just really quick, just to give people an idea. I think that especially though the shelter change, the fact that they didn't change is particularly notable, and it has been 0.4 for both of those for the past 3 or 4 months, and that's in terms of monthly increases. We'll see how that pans out. It does seem particularly stubborn, and I especially don't know why rent of primary residence has been so sticky, and has these increases been not moving at all, when on the other side we're seeing market rate apartments. Rents are, as apartment list measures them, rent growth, year-over-year rent growth has been negative for a full year.
So at what point will those numbers start seeping in?
Yeah.